Hey everyone, my name is Praying for Exits, and I run a venture capital fund called Exits Capital based in California. I've been investing in technology companies for the last 8 years, and now I run a media platform called Exits Media that will be focused on telling the best stories in early stage technology across founders and investors. Today we're talking about venture capitalists. Who are they, what do they do, and how do they regularly become some of the richest people in the world? A venture capitalist is somebody that takes money, whether it's their own or other people's, and invests them in technology companies before they reach public markets. Primarily, they meet these companies at the earliest stages of their lives and provide them with support both monetarily and through their network to be able to get these companies up and running as fast as possible and grow them as quickly as possible to eventually exit the business. The first venture capital investment I ever made was in a company called Clarity Money that eventually got sold to Goldman Sachs for about $100 million and ended up becoming the platform by which Goldman Sachs offered consumer banking to the general public.
Was it exciting for you when that happened?
Not really. The way that people get into venture capital is kind of varied. There's three main paths by which most people end up in venture capital. One is working at an early stage startup. A lot of people who work at early stage startups become good investors because they kind of understand the journey that early stage founders have to go through to run a successful company. And so a lot of the best venture capitalists in the world right now are people that have worked in the first generation of internet companies or built and sold businesses in the past in some way, shape, or form. The second is pure financial. So there's a lot of other people who have basically worked in finance their entire life, whether it be banking, investment banking, private equity, some version of this, and then they take those skills and apply them to technology. And then the third way is basically completely random. There's quite a lot of people who end up as venture capitalists without ever really even trying or knowing that they were going to get there. The way that venture capitalists get paid is probably one of the best hacks in the entire world. So say that you, for illustration's sake, raise $100 from somebody and you basically invest in an early stage tech company and they pay you back $200. You have made $100 profit on that original money. 80% goes to the investors, so they receive $180 and you get $20. You didn't put up any risk for that $20. You took somebody else's money and they took 100% of the risk and you basically get 20% of the reward. Also on top of that, there's a management fee associated with managing other people's money. And so if you think about this at scale, these venture capitalists are basically seeing fantastic amounts of money for relatively low risk. If everything fails, you run the risk of reputational risk. So basically, your reputation is on the line. And venture capital is a very small community, so people don't forget things very quickly. Other than that, you do not run any risk. I think the reason that everybody doesn't do it is because it's hard to find the money. So even at the smallest scale, you need hundreds of thousands of dollars to be able to do it effectively. Most people in the world don't have hundreds of thousands of dollars to throw into companies that most likely won't work. So it makes it a little bit difficult. I know high school venture capitalists, actually. There's a great kid named Eric Zhu who basically raised an entire venture capital fund in the bathroom of his high school, in between classes. And so if I were a high school kid or anybody who was interested in venture capital generally, I think that the best thing that you can do is be helpful to startups, find people with interesting ideas and just be helpful to them, whatever they need, and then figure out, how you get paid from there. Once all the money is made, there's a few different options. Some people kind of ride off into the sunset and buy a mansion and just kind of forget about things. And then there's other people who create their own investment companies. Instead of having to go out and ask other people for the money to invest, you now have your own money to basically go and make these decisions without having to ask anybody. And then the third thing is there's some people who are just addicted to starting companies and finding them. Some of the best venture investors in the world have made billions of dollars already, but still show up to work every day because they really care about the technology. One question a lot of people have is when you find these companies, how do you tell if they're a good company or not? The way that venture capitalists do it is a few different ways. So obviously there's going to be a team of people who start these companies and you'll be able to go to your network and say, hey, how was this guy when he was working at this company? What was your experience with them like? Did they seem like a hard worker? Did they seem like they had really great ideas? And then the other aspect of it is, while you can't really tell how a company is going to do, you can kind of tell how the market that it's going into is doing, right? Venture capital funds and investors try to be technically proficient. So if you're an AI person, you know a lot about large language models. If you are a defense investor, you typically know how hard tech things function, how they're built, how they're sold. So it's taking subject matter expertise on top of the other things that I mentioned and overlaying it into your understanding of, are these people going to solve this problem? So that's how venture capitalists make billions of dollars investing in tech companies. Over the next couple of weeks, we'll be explaining to you the ins and outs of how early stage technology works and the different ways that you can participate in it. Very shortly, we'll be sharing a video that we did with Brex, Enrique, and Pedro And we'll get some of the answers to the questions that we asked here today straight from the horse's mouth and understand what it's like building a $13 billion fintech business and what they learned during their journey. And last but not least, like, subscribe. And if you guys have any questions that you'd like answered or different topics that you'd like to see covered, please drop them in the comments below and we'll make sure to do the most interesting ones.